Welcome to Law 2024 Online, Wills and Probate Shape the Debate, with me, Leslie King, Helen Forster, and Julie Bell. Today's question and answer is due to last 1 hour and will cover your pre-submitted questions. This session is sponsored by Watchman, which I'm sure many of you will already be familiar with. But just in case you're not, I'll tell you a little bit about Watchman. It's a specialist insurance policy, which is only available to solicitors. It provides insurance for unoccupied properties and has been revolutionary in changing the way probate solicitors protect their clients' estates by reducing initial pressure on your funds while you're still trying to access the estate and sell the property. It achieves this because you don't have to pay a full upfront premium. Cover's secured by simply paying a small deposit and continues with a daily premium charge that is deferred until the property is sold or transferred for up to a year. There are no finance agreements and no cancellation charges. It is also available for homes where clients are in care or have reduced legal capacity. Getting started and arranging cover is easy, and if you would like to learn more about Watchman, you can contact them either on 01935 389812 or via their email watchman@practiceenterprise.com. Okay. So just by way of introduction, I'm Leslie King. I write and lecture on private client matters, and I'm a former member of the Law Society's Wills and Equity Committee and the Probate and Estates Committee of STEP. As part of, I'm losing my headphones here, as part of Law 2024 Online, my sessions included dealing with IPD trusts and the rules on low-income trusts and estates. And I'm going to let Helen and Julie introduce themselves. So Helen, would you like to kick off?
Thank you very much, Leslie. So my name's Helen Forster. I'm the director of HTF Legal, a law firm specialising in what I call private clients, so wills, trust, court of protection, and mental capacity. And I've been talking about how trusts and taxation of trusts, of course, has been impacted and what rules you need to know. And I think we'll be talking, no doubt, about the budget in a little bit and the impact of that as well.
I'm sure we will. And Julie?
Hello, I'm Julie Bell. I'm a consultant solicitor based in Manchester, and I do a variety of teaching for STEP and lecturing as well. And I've talked about digital lasting powers of attorney and what we might need to worry about as they come in.
Okay, folks, so shall we have a go at the questions? And bearing in mind, the budget and what Helen was just saying, I think maybe we don't have that many questions on the budget, but we do have one, which was, have the tax rules changed regarding trusts in the budget? Helen, do you want to say something about that?
I will do. So obviously there was an awful lot of changes that came in across the board, and one of the things that we were looking at and we were told may impact was capital gains tax. So obviously for individuals there was a change in the capital gains tax rules, but there wasn't a change for capital gains tax as far as trust is concerned. So it's still exactly the same as it was. The issue that I think we're going to see with trusts, and obviously Leslie and Julie, it'd be great to have your opinion on this, is the issues surrounding business assets and agricultural assets now being subject to a combined limit of £1 million for tax. Because of course, a lot of asset protection nowadays is setting up either lifetime trusts or trusts within wills, and often they're discretionary trusts, which come under the 10-year regime. And of course, if you've got a lifetime trust, for example, with a business in it that's worth £5 million, if it fully qualified for business property relief, you got to a 10-year charge and you would be exempt for the price of the business because you get business property relief. So my concern would be actual trusts currently in place that have, say, business or agricultural assets in. And I think there's a worry then about how that's going to impact things like the annual charges, that sort of thing, exit charges. So I don't know what your opinion is on this. I might turn to Leslie first because I can see you're nodding on this. It must be something you're worried about as well.
I'm just worried generally about the reduction in the 100% relief for businesses and agricultural property. It seems far too low to me. I mean, you're absolutely right that many businesses have already been set up in trusts and they are going to be facing 10-yearly charges. The only thing that I've seen specifically about trusts, because there is going to be a consultation, but it said that for trusts that have already been set up, if you've set up several, each of them will have its own £1 million limit. But for trusts set up on or after budget day, that 1 million is going to be spread between the trusts. And, it's going to be a huge burden. And it's a huge burden for, for individuals who are thinking about passing on their businesses. And obviously you can make lifetime gifts, but although the limit isn't coming in for a couple of years, I get confused with the dates, but it's 2027, isn't it, for this one? If you make a gift today and die within 7 years, then you are going, after that date, you are going to be caught with the new rules and the £1 million limit. One thing that I did hear somebody saying, and I thought, oh, that's quite sensible, isn't it? Is have a good look at any estates that you're dealing with at the moment where someone has died, just to see if there's anything that you can do with a post-death variation or a Section 144 appointment that might improve things in relation to the limit on the relief. That it's not a lot that you're going to be able to do, but it would be annoying to miss something. So I think just be very careful with any estates that you're dealing with. Julie, do you have anything you want to add?
So I think it's going to reduce the usefulness of trusts and the use of trusts. It has to. And I've also been really surprised that a lot of the press has just concentrated on farmers and the agriculture relief. There hasn't really been anything about businesses. Bearing in mind, businesses tend to employ more people than farming. I'm surprised the press haven't found somebody who runs some sort of factory going, well, this is a disaster for me. And I think it will mean that business owners and farmers are going to have to do more aggressive lifetime planning rather than I'm going to cling on to my assets. I can cling on to them. They're going to have to do more planning, which is, potentially good news for us.
Yeah, one of the things that I think, which was highlighted actually by the Office of Tax Simplification a little while ago, is that up until now, there's been this tension, hasn't there, that if you give away your business to your children, you lose out on the capital gains tax uplift that you would otherwise get on death. Well, now you might be thinking, well, actually, I'll take not getting the capital gains tax uplift on death. I'll give away my business earlier to my children and hope to survive for the 7 years. But from a capital gains tax point of view, that is just going to lock in any capital gains that you've already made, because you'll be able to claim holdover relief, but you won't get the uplift. So do you want to say anything else? Just general gloom, I think.
Yes. Interesting note to start with.
I suppose the only thing that I was momentarily cheered by, which came quite early in the budget speech, was when Rachel Reeves said no increases in the nil rate band or the residents' nil rate band. So I did think, oh, right, so she's not abolishing the residents' nil rate band, because that does provide quite a lot of work for lawyers. Okay, let's abandon the depressing budget. What have we got? Julie, shall I go to you? Does TA and the public guardian change the role of certificate providers?
Okay, so just to sort of give you a little bit of a brief reminder of what this case is. We have an elderly lady in her 90s in a care home, makes a power of attorney, appointing her daughter. Certificate provider is the daughter's ex-mother-in-law. So we're keeping things nice and close. And ex-mother-in-law doesn't see her. She speaks to her on the telephone and sort of signs off the power of attorney. We have previous power of attorney. Naturally, in this case, we have other children of this lady. Previous powers of attorney have had them all on board, and now we've got just the daughter. And then the question goes to, what did this certificate provider do? What does she have to do? Because obviously she's got her signature on this document that she is, happy with things, and what the role of the certificate provider is to do. And I think it would help just to look at the legislation as to what the courts look at. So a certificate provider, in his opinion, his or her opinion, so the opinion of the certificate provider is crucial. At the time when the document is signed by the donor understands the purpose of the instrument and the scope of the authority conferred under it. No fraud or undue pressure is being used to induce the donor to create a lasting power of attorney, and there is nothing else to prevent this lasting power of attorney being signed. And basically, the certificate provider didn't do that job. So they couldn't, the document had been signed, so it doesn't change the role of the certificate provider. I think it highlights that there is a role to do, that sometimes in perhaps family drawn up powers of attorney, where it's all done very informally, neighbour comes round and they are the ones that get challenged because they aren't being done properly. There isn't that time spent with the donor to satisfy, for the certificate provider to form an opinion.
So it's just raising the bar a bit.
Highlighting the bar that already is there.
Yeah. Yes.
And that people have just
the
been
bar that was ignored.
quite frankly ignored. Yeah. And it is amazing how it is these ones that are homemade, that the ones that then come back to sort of haunt people.
Okay.
And also, they tend to pick quite elderly certificate providers who then don't wish to be involved in any litigation.
So the advice would presumably be, if you don't want your lasting power of attorney to be challenged, try and choose a sentient certificate provider who's going to take it seriously.
Exactly. Yeah.
Okay. I'll do one now. Helen,
say, just to keep on the back of that is, sorry, I do apologize. I think there's a time delay. Just saying, what I would kick into that actually is just some experience on the Office of Public Guardian looking into a certificate provider. And of course, what they do is they keep the power of attorney sort of at bay, on hold, until they've investigated this. So I actually had one where we had some questions. I was representing someone, and it genuinely took them 8 months to actually investigate this. So that was 8 months that this couldn't be used on behalf of this lady who needed someone to act in respect of her affairs. So I think it would be great to kind of flag that as well, in that if you do have issues, they aren't going to be resolved straight away for you to then kick in. They actually have this investment to have an impact. So it's another reason why people really need to be advised properly in terms of who should do it and how they do their job and why it's so important, because people just think it's a tick box, don't they? It's a tick box exercise. So I think that's just another thing to kick onto that is, you're exactly right. People don't necessarily take it as seriously as us practitioners, and maybe we need to blog a bit more about this, and we need to get this information out there. Maybe with the new digital LPAs where they've got to ID them, that might make them think this is a bit more serious. Fingers crossed.
And also it's finding out when you can see this is going to be either a vexatious family, we've already been in litigation, somebody isn't going to like this power of attorney, we need to make those extra steps, because there might be no grounds to complain, but this person is going to complain whatever. So we need to try and block everything off to try and close those routes as much as we can.
If we're involved.
Absolutely.
But of course,
yes.
the problem is the ones that are done if we're not involved, then yes, to lawyers.
Yeah.
Okay, I'm going to take one now, which is, how do I know if I have to do a self-assessment tax return for an estate? And it's entirely revenue practice and procedure, this. and it's the revenue's rules. And what they say is that you have to do a self-assessment tax return for each tax year of the administration if you are what they classify as a complex estate. If you're not a complex estate, and I'll talk in a moment about what the conditions are, but if you're not a complex estate, then life is an awful lot easier, because apart from possible accelerated payment of capital gains tax on residential properties, apart from that, if you're a simple estate, you don't do a tax return each year for the administration. You simply keep a record of your income and your gains. And then at the end of the administration period, you send a copy of your calculation to the revenue, and provided they agree, they give you a reference number and you make a one-off payment. Now, if you're not a simple estate, if you're a complex estate, then you do have to do a tax return each year. And of course, also you have the accelerated reporting and payment of the capital gains tax on residential property. And to be a complex estate, you are complex if you fulfill any one of three conditions. And the first condition is that the gross probate value of the estate exceeded 2.5 million, or that the total income tax or and capital gains tax for the entire administration period was more than 10,000, or your personal representatives have sold more than £500,000 worth of property in any one tax year. So those are any one of those, and you are a complex estate. And what I've always thought about it was that it isn't always totally apparent whether you are going to be complex right at the beginning of your administration. And a couple of years ago, the Revenue put something in the Trust and Estates newsletter about this. And I thought they were really quite blasé about it, because what they said was, well, it's easy to see whether or not your gross probate values are more than 2.5 million. And that's true. But then they said you can form, but of course you may find, assets that you didn't know about, but you've done your best, and as far as you can see, you don't exceed 2.5. Then they said, as far as the income and gains are concerned, you can see how much you've got in the way of income producing assets, and so you can tell whether or not you're likely to exceed £10,000. And well, hang on, excuse me, we don't know how long our administration period's going to go on, and also we won't know for sure whether or not we're going to make any gains. And the thing about, disposing of property in a tax year for more than 500,000, well, you have to take a view, don't you? If you've got a property and it's, 475,000, it can easily go up or down. So I thought they were a bit blasé about it. And the problem has always been that if you become complex when you thought that you were simple, you won't have been putting in tax returns. And when you do put in a tax return and say, oh, look, sorry, we should have been doing this, they are likely to impose a penalty. Although you can normally say to them, look, sorry, we didn't know that we were supposed to be doing this. They used to insist that you then did tax returns for the earlier years. But I noticed in the Trust and Estates newsletter about 18 months ago, maybe 2 years, they said that provided the reason that you've become complex was unexpected and unforeseeable, they won't insist on you doing tax returns for the earlier years, but they would require you to do tax returns for future years once you've become complex. So I suppose all I'd say is it's worth perhaps being a little bit conservative. And if you think you're near the edge, you might be a complex estate, then it might be worth going, well, actually, I'll do the tax returns every year rather than hoping that I'll get away with being simple. But many, many estates do not have to do tax returns every year, and it is helpful when you don't.
Is it worth mentioning budget again and pensions if we've got nominated pensions? Because I know a lot of people are going to be worried about this, aren't they? So you've got a 1.3 million pension that at the moment, of course, could pass pre 75 if someone dies with a nominated letter of wishes. So they're outside of the estate. After 2027, potentially now going to be coming in to add to this sort of tax problem, could then result in more estates needing to do returns that wouldn't have needed them perhaps previously.
Uh, that's an interesting point, Helen. I don't think it's going to work like that, but we are very much in the dark about how it's going to work. Again, so just backtracking a bit. So as we know, and I think a lot of people were quite expecting, discretionary pension schemes were not intended to be a way of passing on wealth free of IHT, but that was a possibly unintended consequence of George Osborne's reforms. And I think we have all been thinking it was a bit too good to be true to carry on. And the advice has always been up till now, spend your other assets and leave your pension pot intact so that you can pass it on tax free. Well, now it is going to be part of your IHT estate. But the way they're going to, they've only done a very short report and they are going to be consulting. But the way they're thinking of dealing with it is that the PRs and the pension scheme administrators will talk to each other and they will tell each other the value of the free estate, that'll be the PRs, and the funds in the pension, that'll be the administrator. The PRs then work out the tax on the whole thing, then they apportion it, and the pension scheme administrators are responsible for paying the IHT on the pension funds, which they will then pass to a beneficiary. And what the revenue, or the government, I suppose it is, say in this initial sort of briefing paper, that this will be beneficial because it will mean that the funds come out of the pension pot before it's given to a beneficiary. And if the whole pot was given to a beneficiary and the beneficiary was then told you have got to pay the IHT that's attributable to this, when they drew down on it, there would be an income tax charge if the pension owner had died over 75. And so in order to get the money to pay the IHT, you would then be paying an income tax charge on top. So they have recognised that that would be unfair. So the way they're proposing to deal with it is pension scheme administrator pays the IHT, what's left gets given to the beneficiary. So in relation to income tax, I'm thinking, and I could easily be wrong, but I'm thinking that it will never come actually into the estate as such. It's part of the estate for IHT, but it's not going to pass through the hands of the PRs. So I'm hoping that won't be a problem, but I can foresee many problems, including just going back to the residence nil rate band.
Yes.
An awful lot of estates are no longer going to be anywhere near the £2 million taper threshold, because as soon as you dump a pension pot, even quite a modest one in, you're almost bound to be edging towards your 2 million if you're the survivor of a married couple with a house and some investments. Put your pension pot in, £2 million easy, I would say.
Yeah, so it's causing a more significant tax liability that we wouldn't have had. But it's interesting. So essentially, what's the consultation at the moment, the little bit of guidance we've got, is essentially treating it in the same way as if I was the beneficiary of a life interest trust.
That's exactly the analogy they're drawing.
Bringing it in line. Yeah, so that's interesting, and fingers crossed it works something like that, because we already, hopefully, a lot of people listening will have a working knowledge of how that works. So that would that would be useful. Whether or not, as you say, we get over the line to that degree, who knows by 2027. But I do know I have had, and I'm certain a lot of people listening will have, a flurry of clients kind of immediately saying, right, I need to get everything out of my pension. I want to gift it now. What do I do? So it's quite a useful thing to understand how that one works and kind of tell people, take a breath. We'll try and sort this out, but it's a big problem, massive
But
problem, I
yeah,
think now.
and I mean, they are right. I mean, the conventional advice of, spend your other funds before your pension is now almost, well, I think it is turned on its head, because let's say I'm 75 and I die and I pass my pension pot on to my daughter. So it suffers probably 40% inheritance tax before it gets
Mhm.
to her. And then anything that she takes out of it is going to be taxed at her income tax rates. Now, if
Mhm.
I simply give her a legacy of £400,000, yes, it'll suffer IHT, but when she draws on it to repair her roof or whatever,
Mm.
then she isn't paying income tax on it.
Income.
So,
Mhm.
it's making pension pots really quite unattractive to pass on.
Absolutely.
Are we done on pension pots?
Yeah, I
Okay.
think so.
Probably, I think for the best, really. Yes, let's
Um,
move on quickly.
Okay, who have we got next? So I tend to lose track when I'm doing this. Julie, is it your turn? Or
well, I'm happy to have a chat. Shall I do
Yeah.
the will there be a commercial impact
that's just the one
on
I was looking at.
LPAs being made digitally? And by I'm presuming by commercial impact they mean on professionals drafting these things. And I think yes is the short answer. I think there is such a push now for lay individuals to do things themselves. When who would have imagined would be where we are with probates and lay applications for probates 20 years ago? It was very rare that somebody would do it themselves. We're nearly at half. And so, I suspect there'll be quite a big advertising campaign when this goes digitally. And again, a push that for the majority of people, this is something you can do yourself. They're building in those safeguards. So hopefully there'll be less errors, that you won't be able to carry on into each stage until you've sort of corrected your issues. So I think then sort of for private client people, where does that leave us? And I think one of the things is ensuring that you charge enough for your wills. If there was an expectation that you would be doing, you'd do the will, you'd do a power of attorney, and you'd get the probate. There's no certainty of any of that now. So, and the government is mentioned, putting no onus on people to do their wills. They want people to go and see professionals so that we aren't all sort of bunging up the courts with litigation. So then you need to think about where you're putting your added value in, and it's going to be a more onerous thing for professionals to do it for an individual because of the ID issues and things. Yeah, I think it will be interesting times ahead.
There is the point, isn't there? I'm just thinking, somebody asked me recently about LPAs for business clients. And I mean, rather in the same way that we tend to get the difficult probates where people go,
Mm.
oh no, I can't do this myself, this is too difficult. I guess that there might be some more complex LPAs where people will at least go, well, even if I input it myself, I need help on
And some
exactly.
advice.
Yeah.
Yeah.
Mhm.
Yeah, and people, it'll be interesting to see what sort of, because it's not like probate. You do need some advice and thought. If you're just doing probate of a will, you're implementing a will that's already there. It is a rather set process. Where if I'm thinking of making this new document that's going to control my finances, perhaps I do need some advice from an impartial person, to see what the best way to go about and who I should be appointing.
And
And that
making
is
people aware of the
getting the message
risks.
out.
Mm,
Mm.
mm.
It's risk, isn't it? Exactly what Leslie's saying. You need to get that message out there because if somebody has a diagnosis, current current LPAs, you don't even need to notify people. I've always ranted about that. And it gets rid of one of the key safeguards we've always had, which is, it's not just my opinion that this person knew what they were doing, it's this, and this person as well. And people didn't realize that. The minute they see something optional, they just go, I'll ignore it and move on. And I think doing their own LPAs carries the same risk as probate. And I know I'm finding, I'm sure a lot of practitioners are finding this. I'm unpicking probate matters because certainly pre-2008 wills with a nil rate band trust in, and daughter's done probate herself and then gone, oh yeah, well it all went to mum, didn't it? And you go, well no, that says it's a trust. Yeah, but she's the beneficiary, so I just gave her everything. And you've got to unpick it all and get it all sorted out. So what I'm actually finding is, has things like LPAs or self-probating, as somebody called it the other day, which made me laugh, is this impacting the work we're doing? And actually, I'm finding it hasn't impacted the business, just my business role has changed. Quite often now it's unpicking the problems that we've had. So ironically, I'm probably getting paid more than I would have been had I done the other part. And I think the same with the LPAs. We now actually have quite a big department in sorting out problem attorneys that have, shouldn't have necessarily been an appropriate person. And I throw this one in here because I know Julie, of course, our specialist here for LPAs. As I understand with the digital LPA service, they are still not planning to ID check an attorney. And if an attorney is not an appropriate person, like somebody who might be bankrupt or somebody who has been a bit naughty in the past, maybe a bit wayward, I like that word, might have some sort of embezzlement, that sort of thing. Well, family members are still appointing them because, oh, it's my son. I think there's a real risk for professionals doing this because we don't ID them, and we could be.
Well, we don't do a probity check, do we? It's not an ID check. It's more of a probity check. Then that is reliant on your client telling you the history of their naughty children.
Mm-hmm. Yeah, and I think with LPAs, it missed a bit of a trick.
Yeah, but unfortunately, naughtiness doesn't actually always come with a conviction for fraud.
No,
because they haven't had a chance up till now.
No, they haven't been caught.
Yeah, exactly.
Yeah, and I think that's the point I'm making is I think practitioners, we need to adapt to be able to say we offer services where if you have any concerns, you can come and talk to us about it, as opposed to, oh, all we do is put them in place. I know we've adapted. We've gone back to maybe a bit of an old-fashioned thing, and we do a will interpretation where people can come and pay a fixed fee to come and have the will kind of essentially read to them in terms of what it means in English, because they're not coming to us to swear for probate purposes anymore, as they used to, which is when we check over what's in there. And so people are self-administering estates wrong and incorrectly because they don't really understand the legal jargon in there to understand what needs to be involved. And that was a good check.
And it's the numbers, it's the numbers you have to put in the probate, just tip-tapping away as a layperson. You dread to think how many are being done incorrectly, where people are just tip-tapping on a laptop somewhere.
Yeah, probably doing it whilst they start watching telly. But yeah, you're exactly right. And so we've adapted our services to kind of say we don't just do these anymore. We do all this as well. And I think that's where a lot of firms are starting to now, I think, see that they're going to have to move on with that, because just we do the LPAs doesn't answer. They probably do the other work as well, but we need to be actually saying we do this and this is the reason why. So I think again it's the education of how we're going to get that to people is the problem, but we'll see what we'll see.
Offering to explain what a will means is a really good idea, because so many people just don't understand at all. And on the figures that you're inputting when you're applying for a grant, my uncle died recently, and my cousin, his daughter, was doing the probate. So she was sending me lots of queries, and she's an intelligent person, but, obviously not a lawyer. And she said, this figure here, which was asking for, I think it was the net value of the estate. And she said, is that where I put the 325,000 for this nil rate band thingy? No, it's a completely different thing. I was thinking, how could you get to thinking that net value of the estate was the nil rate bands? But anyway, that's what she was thinking. So there
But
we go.
I don't think the guidance is very clear
It's
for
not.
lay
It's
people.
terrible.
It's
Well,
almost
it's not,
non-existent. Yeah, it's not
and it's not.
obvious.
It's not great for practitioners actually,
No.
because when I first looked at it, I was thinking, what? What does this mean? And it's only when you've gone through the definitions that they put in to the accepted estates regulations. I think for lay people, there's an IHT calculator, and if you actually use that online, it does give you the three figures that you need, but you have to have found that because it's not, you don't get to it from the form. Anyway, whose turn is it? Is it my turn or is it Helen's turn?
It might be mine. I'm not sure.
Okay, you take one then, Helen.
We'll go that way. Yeah.
Do you want to choose one, or do you want me to give you one?
Shall I address the I think this is a question that's come up a few times with me. Can my spouse be a beneficiary of a trust? And I get it an awful lot. Certainly, when you're writing wills, the answer would be that isn't an issue. But a lot of people are doing a lot of lifetime planning now, and it's kind of knocking in. And I've had a lot of clients that I think are using Captain Google. I have a feeling, and they've come to me and they've said, right, I want to set up a trust. I don't want to benefit from it at all. But my beneficiaries are going to be my spouse and my children, and I'm going to give all the income to my spouse. So for tax purposes, I can walk away from it. And I think it's just understanding the difference. If you set up a trust of which your spouse is a beneficiary and you're alive, then it's settler interested for tax purposes and it's still classed as your asset. And so for tax planning will not work. You have to walk away. Now, there's an interesting point, and I'd love your opinion on this, Leslie and Julie. Somebody said to me, well, what if we're cohabiting? And I kind of sat there and I thought, at the moment, there isn't anything to stop a cohabitee being a beneficiary. But there are reforms coming at the moment in family law to do with cohabitees. And I kind of think that in the long term, what's going to then happen is that we'll then have a role back into the private client sphere as well. So I did have somebody that said, but my cohabitee could be a beneficiary. And I think they're absolutely correct at the moment, but I think there's only going to be perhaps, in the foreseeable future, that is likely to be adapted because people just don't seem to get married anymore. That it's maybe on their to-do list, or in fact, somebody I know just said, no, I'm never going to do that. Okay, that's fine, but you've been together for 17 years. Fair enough. So there's an awful lot of this sort of thing happening now. And I just suspect that in the future, sort of reforms that I could see maybe on the horizon is bringing cohabitees in very much like what people still refer to, don't they, as the common law spouse, may have some sort of effect in the future. So I don't know what your view is on that, but certainly the spouses at the moment will be settler interest. It's not going to work for tax. Don't do it. But what's your view sort of on the cohabitees, both of you, and would you set one up for one?
I suppose, how would you define a cohabitee in this context? We can clearly define a spouse. You're married or you're not married. How would we define a cohabitee? And I think that is a tricky point. If they have their own house, they're living together sometimes, someone's working away. I think it would be quite hard to bring cohabitees into settler interested trusts. I don't know what Leslie thinks.
I wouldn't be worried at the moment about setting up a trust with a life interest for a cohabitee. I would think that any changes are sufficiently far down the line. I mean, I think Helen's quite right that there's a head of steam that's going, oh, marriage, what's the point of marriage, why should we have special rules for marriage? But the thing is, they do tend to work quite well, really. And for example, are you going to give the IHT spouse exemption to a cohabitee? And as Julie says, how are you going to decide when they become a cohabitee? So I think it would take a lot of parliamentary time, and I think they might be a bit too busy at the moment.
I would absolutely agree, but it's an interesting point, isn't it, that these things could be on the horizon, and there's reform already coming in one area. It's not difficult to see that it could come in, but as you say, probably bigger fish to fry right now, but I can see why people would. And certainly if I kind of track back on that, when I have wills witnessed, I absolutely don't want a cohabitee as a witness to a will. I will say, no, I want it totally independent. Don't do that. Even though technically it wouldn't invalidate a gift as things stand. I just think it doesn't sit too right with that.
No.
So I'm quite keen on kind of saying keep away from that anyway. But in terms of the trust sphere, they could indeed be a beneficiary of it. They could receive it, and it wouldn't be classed as settlor interested. You'd still get the relief. So it's an option potentially, but certainly not if you've got a spouse or civil partner. Don't put them down if you're going to set up a trust for tax planning, because it's just not going to work.
Absolutely. Okay, I'll do one. Does the £500 de minimis limit for trust income include income from ISAs? Okay. So what we've got this year is the introduction of a de minimis amount of income, which is a sort of adaptation of the old concession that existed. The old concession only applied to interest, and that's now been widened out to income of any sort. And provided it doesn't exceed £500, PRs don't have to pay any income tax. They will simply pay the income over to whatever beneficiary is entitled to it. And there are similar rules for trusts, but I'll stick with PRs for this question. And ISAs, of course, when ISAs were first introduced, they lost their tax-free wrapper as soon as you died. But back in, was it 2017 or 2016? Anyway, quite some years ago now, we got a change, and ISAs keep their ISA wrapper for the period of the administration, or 3 years, whichever is the shorter. So, if you've got a protracted administration period, you will run out after 3 years. Because you keep your ISA wrapper, that income is completely tax-free. And so it sits outside your £500 de minimis limit. So that they are separate. That £500 de minimis limit, quite bizarrely to my mind, if you pass on to beneficiaries income that's within that de minimis limit, they don't have to pay any tax on it.
No.
So it's completely brilliant.
I was going to say, can you clarify that for everybody?
No, it's absolutely true and bizarre to my mind, and I don't understand why it is as it is, except that I suppose we're talking relatively small amounts, and estates do get wound up eventually. It's not the same for trusts. If you pay a de minimis amount of income to a trust beneficiary, then they do have to include it on their tax returns. But for estates, if the amount is within the de minimis limit, the beneficiary doesn't have to pay any income tax on it, which sounds great. And indeed, I thought it was great, and I still think it's quite good. But it does potentially actually give PRs more work. Because initially I thought, oh, great, less work for PRs. They won't have to run around giving charities forms R185 for piddling amounts of income, which is true. But what the revenues say is that you get this £500 de minimis amount every year, but you can't roll an unused bit forward. So it's £500 per tax year. So you may easily have an administration which perhaps covers bits of 3 tax years. So in your first little bit of a tax year, you might have a tiny amount of income, which is within your de minimis limit. Then you might have a whole full tax year where perhaps you get more than £500. So you're outside your de minimis limit. And then maybe in your third tax year, where you're just about to wind up, you have a little bit of income, which again is within the de minimis limit. You have to keep a record of how much income came in each tax year, so that you can tell your beneficiary which tax year it was received in. And it also ties in with what I was saying about the simple and complex estates. Because if you're a simple estate where you just do a one-off calculation at the end, I've had lots of people who've said to me, well, up till now, I've never bothered to allocate my income to particular tax
No.
years. I've just kept a running
Put it all
total
in, yeah.
of how much has come in, which does rather rely on you thinking that tax rates aren't going to change, but that's what people have done. Well, actually now they will have to break it down into so much per tax year if they're hovering around the £500 mark, because they need to know whether or not they've got to pay tax on it. So longish answer to short question, ISA completely separate, but lots of other problems around that £500 de minimis.
And of course, just kicking on that, declaring to beneficiaries that it's been received as well, because I know a lot of people aren't perhaps aware that when they're paying out, they're busy thinking about it. Do I need to do anything with it? They might pay the tax that's due on it, and then they just pay the beneficiaries, whereas perhaps they're not necessarily declaring. I've seen a lot of things where people didn't realize they'd have to say, well, so much of it is income, and you might potentially have to include it in your own tax returns, that sort of thing. So I think it does have a bit of a knock-on effect that way at the end. And I do know the kind of R185 pain that we used to have, where you'd have like, oh, well, we've paid you this and there's £1.85, is very frustrating, but it's there obviously for a reason. And it's quite an important reason if there was tax to pay. Because again, I look at risk, and if you're not telling people and then they should have paid tax and say there was a penalty, they're going to come at the practitioner. So it's making sure you declare it at that end point, or now, as you rightly say, Leslie, per tax year, isn't it? You're going to have to say each one. And does that mean you have to declare that income to them each tax year if they do have anything to pay on it? I assume that would only be if they have an interim payment, but it just has that rollover, doesn't it? Where does it
Well,
come
I
for a
mean,
beneficiary?
something that gives me a headache is what happens if you pay out all your income at the end of the administration period, because you will actually have to say to the beneficiary, well, £40 of this is within the de minimis limits and £150 isn't, so you will have to declare £150. I think that's how it will work. And good luck
Yeah.
to the self-probaters is all I can
Yeah.
say.
Yeah. But if it was, I'm just throwing in another one, if you'd received the income in different tax years, is there a thought process that perhaps they would have to declare it on the tax years it was received? I know I may be overthinking it, but there could be that, because if a lot of people make interim payments, don't they? They'll make interim payments for the states. They don't just wait to the end. You'll normally do some payouts maybe in the middle whilst you're waiting for, say, a house to sell. And what's the knock-on effect with that going to be if we have to declare them per tax year? It could be quite an interesting one.
But doesn't it apply at the moment anyway if you make an interim payment? If you make an interim payment, you have to tell the beneficiary how much of it is income and how much of it is
Yeah,
capital. So it is
you
just
should
the
do.
same.
Yeah,
You
you
certainly
should do,
should.
but a lot of people don't, and this is what I'm just trying to say is a lot of people forget about that, and they deal with it at the end, as you rightly say, and just go, right, here's the lump sum. They're not thinking about it when they're doing the interim as well. So it's just going to be an interesting point,
Yeah,
I
I
think.
always say to practitioners who are dealing with the administration of an estate that insofar as possible, you don't want to dollop out a huge lump of income in one tax year to a beneficiary, because that can very easily push them into a higher tax bracket. So other things
Yeah.
being equal, if you can face it, you are actually being kinder to beneficiaries if you pay out income fairly regularly insofar as you can.
Mm-hmm.
But there are a lot of things to think about when administering an estate.
Mm-hmm.
Okay, so Julie, do you want to take one next?
Yeah, so we've got Denzel Lush said a few years ago he would never make an LPA,
Oh,
rather
I
strongly.
remember that. He said it on
Yes,
Radio
yeah.
4. I heard him.
Yeah, I remember it fondly on his
As
retirement,
he
if I remember
retired, I
rightly.
know, yeah, as his sort of exit stage left, with these changes to how we make a power of attorney make Denzel change his mind. And I don't think they would. So Denzel basically came out and said people are being so negative about deputyships, they're being pointed to doing powers of attorney, and powers of attorney are really high risk. And this new way of making them isn't going to stop naughty attorneys. And Denzel really liked deputyships because he liked the security bond. I don't know if Denzel didn't personally trust anyone he might have considered appointing as an attorney because it was, because there is obviously a cost implication to having the security bond. And he also liked the fact that you're having to do annual accounts, if you go the deputyship route. But, if it's your spouse, that's quite an onerous thing to have to do for your loved one, particularly if you're sort of doing care for them or whatever. And then we're adding this on top. So I don't think it would make Denzel change his mind one little bit.
I'm
No,
sure it wouldn't. And what I did think at the time that he said that was he was actually at the time dealing with a very naughty deputyship, which I do remember, which I think was the one where the woman had spent her aunt's money on investing in a crocodile farm or something along those lines.
Mm.
So, naughty deputies. But the security bond is a great comfort, actually, isn't it? And I do know of practitioners who build quite complicated requirements into lasting powers of attorney, requiring the attorney to get yearly accounts signed off. And I think, as you say, it's completely different if it's a spouse. Well, usually it's completely different if it's a spouse. 9 times out of 10, it's different if it's a spouse. But if you are relying on, niece, nephew, it is quite tempting, particularly, and this is something I remember Denzel always said this, if they know they're going to inherit under the will, there comes this temptation to regard the money as theirs. So having a bit of, external oversight can be really useful.
And the bigger the pot you are, the more vulnerable you are because someone can chip away at the edges and you still have a lovely pot. Your care home fees are still being paid, but someone is sort of pilfering away. And so then that does justify, let's have someone looking at this every year and just making sure what you've actually spending on.
I mean, the other thing I think I would maybe point out is there are thousands of LPAs that are registered every single year. But in terms of what Denzel would say, he always saw the worst, wasn't it? It was always when something had come, usually to remove an attorney because they'd been naughty. And so I imagine because he sees the worst in it does sort of jade you a little bit to the use of them. So I know a lot of cases, and I'm sure you all do as well, where they work absolutely fine. But I do see the ones where people do. I've just been appointed as deputy to replace somebody because they'd invested money in gold bullion, cryptocurrency, and Bitcoin. And you kind of start to go, why would you do that? But they didn't think they'd done anything wrong because there was not a lot there. And I think the OPG's cottoned on to a lot of this now because in September they just released a big massive paper on gifting as both a deputy and an attorney for people to be able to look at this and can I just gift myself the annual allowance? That's a good one. People do that, don't they? I'm just going to start this off to me, and it's that sort of thing. It's interesting. It's such an interesting area, but I think Denzel's comment, for me, I remember it fondly in the sense of the flurry of calls that we all got about it, and I can understand where he's coming from because of his experience, but I'm not convinced that his experience is the total big picture. I think it's probably somewhere in the middle. I think there should be more checks on attorneys. I would absolutely agree. And I think the OPG could do with doing some more sort of spot checks, just using the view of, oh, yes, but, they trust their attorney. They chose them. I don't think that's enough, not nowadays. So let's see what comes in. But I know there was talk of a bond potentially coming in for powers of attorney. The Scotland were bandying about actually bringing in a bit like a deputy bond for their version of a power of attorney. And when I was at a course more recently, Judge Hilda said, we're going to see what they do, see how it works, and then we bring it in down here, which I quite like that idea. Basically, see what they do wrong or right, and then we'll put it in here so that it works quite well. So whether or not that happens, I'm not sure. But there's things in there. People are realizing that there is this risk of, if an attorney snaffles money, how do you get it back? Whereas under a deputyship, a deputy snaffles money, you will get your money back. And that's, I think, the main issue. Rather than the problem of they shouldn't be snaffling it in the first place.
Yeah.
But there we go. It's really interesting, though. It's so interesting to see how these things are kind of adapting. Because when I first started practicing, you didn't see much of that. I feel like we can certainly say back in our day now, isn't it? Back in my day, when this all started, you didn't worry about this. Now,
because it went on and people just didn't. Yeah.
EPA's the 4-page document. Wow. I mean, yeah. Unbelievable, but there we go.
Folks, I'm just looking at my watch, which is 2:00. Shall we each take one question very quickly and just do a quick answer? So I've picked out one. Does a life interest trust created on death have to be registered on the trust register, everybody's favourite subject, after 2 years, even if the estate is still being administered? And I can't give a simple yes or no to that, but what I will say is that they are two completely different questions. So your estate has to be registered if it's a complex estate that requires a tax return. So that's question number one. Question number two is, does your trust have to be registered after 2 years? And a trust has to be registered if it's in existence 2 years after the death. So if it's been wound up, your life tenant has died, it doesn't have to be registered. If it hasn't come into existence by 2 years after the death, it doesn't have to be registered. And this is one of those annoying, terribly fine distinctions that the revenue draws in the TRS manual, and it depends entirely on your form of words. So with your normal form of words, where you've left the estate to your trustees to hold on trust, etc., etc., the life interest trust comes into existence at the date of death. If it's still there after 2 years, it has to be registered. But if you say, I appoint X as my executor is to pay the debts and, legacies, and then hold the balance as trustee, then the trust doesn't come into existence until you've finished administering your estate. And so you may, if you've got a protracted administration, not have your trust come into existence for, say, 3 or 4 years. So it's not a yes, no answer, but the important thing is to ask two separate questions. Does my estate have to be registered? Does my trust have to be registered? That's me done. So pick a question, each of you.
I'll go first then. Yeah. So client has a lasting power of attorney appointing 3 attorneys. The page confirming how the attorneys are to act, whether they are jointly or several or jointly, has not been completed. So we don't have ticks box. Lasting power of attorney has been registered. How are they appointed? Well, you are stuck with them appointing jointly, so hopefully that accords with what you wish to happen. Otherwise, you are looking at making a new power of attorney if that is now still possible. So the default is jointly.
Yep.
So the question that I'm going to pick is it right that the nil rate band, whatever it might be, which I know is currently, and I think perhaps forever, 325,000, always tax-free in a discretionary trust? And the answer to that is no, not always. It depends on what has happened in the years prior to you setting it up. So a really easy example would be, let's say I gave Leslie £50,000 in my lifetime. In my will, I leave everything into a discretionary trust when I die. 3 years after I make the gift to Leslie, I die. So the nil rate band applicable to my estate, 325,000, but it's not, is it? Because the gift to Leslie's eaten up 50,000 of that, so it's 275,000. So the amount that my discretionary trust will have tax-free is 275,000 as a starting point. My recommendation would be to advise clients that it's the nil rate band at the time of the charge, less whatever has happened. Because if we're ever in a world where the nil rate band ever increases, say we got to, if I died today and it's 2034, and by some miracle the nil rate band is then 400,000, let's really pitch it here, then the amount you've got tax-free at year 10 for me will be the 400,000 less the 50,000 that I'd given to Leslie when I set it up, because that happened within the 7 years. So actually you'd have 350,000. So it's not as simple as advising, and I know I've heard a lot of people say this, the nil rate band's tax-free and anything above that is at 6%. It's the nil rate band at the time, subject to anything you did previously to it, which might be setting up other trusts, it might be gifts that are made, depends on whether it's a will trust or not. So it's not as simple as just saying it's the nil rate band. Always caveat it, subject to anything that may have occurred prior to it, I think is the way I would do that, just to make sure you cover that. All right, and that's the end of mine, I promise.
Okay, thank you both very much. I have a little bit to say on behalf of the solicitors group, which is there's still time to watch the pre-recorded content. So if you missed the sessions that we three have been talking about, you can still get hold of them. Your expiry date will be displayed next to the webinar, and there's still time to buy the complete event if you haven't done that already. To book, just go to www.thesolicitorsgroup.co.uk, where you will also find the online exhibition. And the exhibition is open for anyone to visit. And if you've booked the entire event, you can claim your free 1-hour CPD webinar from the webinar learning catalogue. Feedback forms for the event will be sent out, and by completing this, you will receive your CPD certificate. So thank you everybody for watching. Thank you, Julie and Helen, for participating. And all three of us hope that it was useful. Thank you.